Hi, my name is Miranda. I'm a business developer at the Entrepreneur Fund. In this video, I'm going to show you how to make a set of cash flow projections in 3 easy steps. If you're struggling with your business's finances, this is a great tool to help you get back on track. Let's get started. Step 1. First, you'll want to open the spreadsheet and navigate to the Year 1 tab. From there, start by listing the types of revenue you have. This could be generic, such as sales, or something more specific to your type of business, such as restaurant income, gift shop revenues, or installation service fees. You can have one or multiple types of revenues, and our spreadsheet has room for up to 4. Let's say I have a landscaping business called Craig's Design and Landscaping. For revenues, I'd type in design income, landscaping contracts, product sales, and other income as my categories. After that, list the types of cost of goods expenses you have. These are expenses directly related to making sales. For example, if you have a grocery store or retail shop, your inventory expense goes here. Since I have a landscaping business, I might fill this out like this. I'll put in inventory for landscaping contracts and inventory for product sales. Once you have your labels made, it's time to start entering numbers into the spreadsheet. I like to do this 1 row at a time. Moving on to step 2. Starting with January if you're already in business, or starting with whatever month you plan to open if you're a new business, enter your first row. If you're already in business, a good starting place for estimating your numbers is to find your actual sales and expenses for the previous months. If you're a new business, you can estimate your revenues and expenses or ask your Entrepreneur Fund advisor to share industry numbers with you for your type of business. If your business is seasonal, your sales and expenses may vary throughout the year. For my sample landscaping business, I might fill it out like this. Starting in January, design income might be something this business gets year-round. Let's estimate $1,800 per month. For landscaping contracts, this might be work the owner of the business just does in the summer. For this expense, we'll enter zeros in for the months that they don't expect to be taking jobs from customers and enter numbers in the months that they do expect to have customers. You'll see that my numbers varied throughout the summer. Most contracting companies will tell you that the summer months are their busiest and July brings in the most revenues. My cash flow projections show that by adjusting the numbers each month based on what the owner of the business expects. Let's say this business also has a small gift shop in their office where they sell products related to the services they offer. They might have this open all year and see revenues all year, but the summer might be a lot busier for them. If that's the case, our cash flow projections will look something like this. The owner of the company might have other income as a source of revenue on their profit and loss statement, but it might not be something that they expect to see regularly or don't have good information for. If that's the case, you can enter in just zeros for this particular item. When you're done with the first row, keep going. Work on each row and enter numbers in as you go. Your cost of goods expenses should follow your revenues for the similar item. For example, with landscaping contracts, this company is only doing landscaping work between April and October, so they'll likely only see an inventory expense for landscaping contract materials April through October. Let's assume that the cost of materials for a landscaping contract is 50% of the revenues that contract will bring in. For certain inventory expenses, such as product sales, you might see an inventory expense each month. In this case, let's say the owner spends $300 per month replenishing sold inventory. In that case, we'd enter $300 for every month of the year. After you finish entering your cost of goods expenses, move on to the section below where there's overhead expenses already listed for you. To be as accurate as you can, try and get firm prices for all of your expenses. If you know your business will need insurance, talk to an insurance agent. They'll be able to quote a monthly price that you can expect. If you're planning on getting a loan, talk to a loan officer to see what your monthly payment will be, or use a loan calculator online. If you're going to be renting a space, talk to your landlord about what your monthly rent would be and if utilities are included. Do your best to estimate each of the overhead expenses. I've gone ahead and entered in all of my estimates for this sample company. Now that you've entered revenue and expenses to the best of your ability, it's time to check your work. Step 3. Once you've filled out your spreadsheet with numbers and put zeros in empty boxes, double check your work to see if it makes sense. Some things to think about are, what amount will my cash flows change each month? Is that reasonable, too high, or too low? Is my spreadsheet missing any expenses I'll know I'll have? Are any of my expenses flexible? Can I lower them if needed? If your monthly cash flows are too high or too low, go through that column and see if you can find anything that needs to be corrected or adjusted. Remember, your first copy is just a draft, and refining it is an important step. If you think of any expenses you didn't include the first time, make sure to add them now. It is common to forget to add owner's pay as an expense. If you aren't going to take money from your business during the months shown on your projections, you can leave owner's pay off for that period. If you are going to take a wage, make sure to add it in. If some of your expenses are flexible and your monthly cash flows are negative, find ways to lower those costs. When you're double checking your work, make sure to look at this net income line and the net change in cash line. The net income line shows the monthly profit you have to work with. The net change in cash line shows what your business's bank account is expected to do each month. Negative numbers, like the ones in these two columns, mean that your business's bank account balance will likely go down. That's something to plan for. There you have it. In just 3 easy steps, you can create a set of cash flow projections. If you don't already have a copy of our cash flow projections template, there's a link in the video's description to download the one I used today. Thanks for watching. If you have additional questions, reach out to your Entrepreneur Fund advisor. Don't have an advisor? Reach out to us at info@entrepreneurfund.org.